Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. Well, as of yesterday, how we've started the week is on the back foot as far as the Nifty is concerned. The Nifty index has recorded its 7th consecutive day of losses on November 18, and this has marked its longest losing streak since February of 2023. And the Nifty is now at the lowest level since June of 5th as well. Now, what yesterday we did see is that the Nifty IT index was in sharp pressure. It fell about 2.3% lower in trade. There were comments from the US Federal Reserve Chairperson Jerome Powell that hinted at or pointed to a decline in the IT-related stocks globally. He pointed out that and he signaled a slower pace of rate cuts that weighed on the domestic IT sentiment as well. Meanwhile, it was the Nifty Metal Index that definitely outperformed in yesterday's trading session. It nearly climbed 2%, and this was after China announced the withdrawal of export tax rebates on select aluminium and copper products, and this move is expected to tighten the global supply, therefore benefiting the Indian producers as of now. Now, what is the global setup right now for the trade today as we head into a day which is right ahead of the truncated holiday that's tomorrow? So the US markets, they ended Monday's session on a mixed note. The Nasdaq definitely recovered from the last week of losses, and it was all thanks to the strong gains on Tesla shares that we saw. The Nasdaq almost lost by 0.6%. We also did see the S&P 500 also recover from 4-5 days of losses. 0.4% of gains could be seen there. However, it was meanwhile that fell about 0.1% in trade overnight. Tracking these, we've seen that the indices in the Asia-Pacific region mostly up in the early morning trading session. Of course, the traders are awaiting comments from China policymakers now at the Investor Summit in Hong Kong. And therefore, all of the eyes will be as to what are the statements that come out from that important summit. As of the early morning trading session, what we've seen is that the Nikkei is up by about 0.5%. Kospi is hovering about 0.4% higher. Hang Seng is up by 0.2% as well. It's only the Shanghai Composite or the China Composite Index that's down by about 0.4%. Also, when we look at the GIFT Nifty trends, at least for now, it's indicative of a positive start for the benchmark index Nifty back home. 23,575 is the level that it is indicative of as to how we will be starting off this day as well. Now, as far as the overseas investors are concerned, the fund flows remain skewed towards the selling side from the FIIs. They were the net sellers of Indian equities for 35th consecutive session on Monday, although the domestic institutional investors, they've continued to stay net buyers. So FPIs have sold stocks worth about 1,400 odd crore rupees in the overnight trading session. What we've seen is that the domestic institutional investors, they mopped up stocks worth about 2,330 odd crore rupees as well. What's the picture on the commodities front? Well, oil has steadied after the biggest gain in more than 5 weeks as the dollar has weakened, and the risk on tone has swept across the wider markets as well. The WTI crude was trading at $69 a barrel after surging about 3.2% overnight in Monday's trading session. What we've also seen is that Brent closed above $73 as well. And what we've also seen is that after a week of losses, even gold prices have reclaimed about 2% from the recent losses and also inched back $2,600 an ounce mark as well. We already have the opening ticks as far as the pre-open trade is concerned. It's indicative of a positive start, just like how I pointed out how the GIFT Nifty will be really looking at about a 0.3% of an uptick, 23,531 as far as the Nifty is concerned. Let's look at the key heavyweight counters to see what kind of an action could we expect. Yesterday it was the IT that was a big drag. Let's look at some of the heavyweight counters there. Infosys, TCS, Wipro. Let's look at all of these stocks that were heavily putting pressure on the markets on the downside yesterday. At least in the pre-open, there is some kind of a recovery. 1.8% higher for Infosys at 1845. Let's also pull up the other stocks like TCS and Wipro and HCL Tech. 1.3% higher for TCS as well, 4,072. That's a 52 rupee of an uptick right here. Wipro up about 0.5% as well. So hopefully IT stocks could come back in today's trading session. Let's also look at the banking counters. The private banks have also been ones that somehow stemmed the fall for the markets yesterday. Stocks like ICICI Bank, Axis Bank, they were the ones that were supporting the banking index yesterday. HDFC Bank is opening about 0.8% higher at 1719. Let's also look at how Axis Bank and ICICI Bank is also opening in trade. So let's look at all of those factors. To ICICI Bank is absolutely flat, and let's also look at, say, for instance, Axis Bank. That was the one that definitely supported the sentiments yesterday, but 0.5% lower. Again, it's a mixed trade that's happening. Let's look at the Nifty Metal Index. That was the one that shone brightly yesterday, whether it's carrying on with that trade in today's trading session as well. Just like how I pointed out that commodities are in fine shape in the early morning trading session, both oil as well as gold, the precious metal, that's actually on a better footing. So let's look at how the metals index as well as how some of those metal counters are actually moving in trade. Okay, we also have our guest who's logged in. We have Mr. Rudra Murthy. He's the research head at Vachna Investments, who is with us now. Warm welcome to you, Rudra. Good to have you with us, and thank you so much for taking the time out. Speaking to you after a little while, and all this while we've actually seen sharp corrections unfold into the markets over last 5-6 odd weeks, and again, there is a lot of fear amongst investors' minds as to how much more downside beyond this 10% correction from the top as far as the benchmarks are concerned. Do you see somehow markets finding a bottom at the current levels, or do you see this just as a dead cat bounce and we may again slip further?
Morning, thanks for having me in the show. And yes, after a bit long time, I'm just back to your show. And then if you remember last time, I was regularly telling avoid PSUs as a general sector, avoid this areas like shipping, avoid areas like railway stocks, avoid areas where people were simply buying irrespective of valuation. And I said, you will see that kind of a sharp correction. And it was 26,000 when we were there in Nifty. It went up to 26,200, and we are now seeing Nifty at 23,500. It has been a 2,700 point of a correction, and I want to now stick my neck out and say what next. I always say I don't mind being wrong, but I don't want to give two-sided opinion at all. But let me tell you very clearly what is my view, and my 22 years of experience now in capital market tells me these points very clear. Number one, FII selling has been for a continuous period of 35 trading sessions. I'm putting the data up front, 35 continuous trading sessions of selling by FII, and that totals to 1,35,000 crore. And this has been a number which has never been seen earlier, and it is twice the selling which you have seen when market saw a big crash either in 2008, or if you even compare the COVID period crash, the selling was hardly between 50,000 to 65,000 crore. Now the selling is 1,35,000 crore. No doubt markets have gone up from where it was in 2008 or during COVID periods to now, but just within 1 month or 1.5 months to be precise, you have seen this kind of a fall. And even if you take November as the month, just for the current month, we have seen selling close to 30,000 crore plus, and this selling is not still stopping. So what I want to tell you from all this data is very clear that yes, FII selling has been very huge. No doubt we are getting that mutual fund buy figures or domestic institutional investors are supporting this market. But however, you don't have big guys on the buy side. And let me tell you, valuation is the number one concern which I had earlier, and that has now shown correction already in market. And do remember one most important fundamental point, earnings. And for me, if you see this quarter earnings which you have seen, and the result season has more or less ended now, it has been 75% of the results which have come right now are been below expectation. And let me tell you, stock prices are slaves of earnings. I repeat, stock prices are slaves of earnings. And I don't expect any earnings recovery to come either in the coming quarter. At least it should take the last quarter or the 2025 first quarter, that is 1st April 2025. So let us look at budget which will be there in February 2025. And let us look at the result season, which will come 3 months from now. Until then, even if you see any bounce in market, it will be sold into. This market has turned into sell on rise market, and this will be my medium to kind of a 6 months to 1 year kind of a time frame view, and you have to be very stock specific and sector. Let me tell you, when there is bloodshed in market, which is currently there, so I am not discouraging investors at current market price. And let me also tell you, for very short term, Sakshi, I am super bullish on market. That means from current market price, I expect Nifty to go to 23,800, 24,000 level, from where again market will see some amount of sell off. So if you ask me what is my short term view at current market price, yes, a rally of about 500 points in Nifty cannot be ruled out. I am on the buy side. I expect a retracement or a bounce in market, because the last selling which has been in market came from 24,500. So this bounce what we are expecting, or what I am expecting at current market price, cannot cross 24,500 from where the previous fall came. So this bounce can go up to 24,000 level. We might see some amount of retracement, and then again the selling will come till you see better earnings, which cannot happen according to me in the next quarter, but only post that. I see budget as another catalyst where market will see some amount of respite and reversal of trend. So right now I'm only expecting retracement and not reversal of trend, and this retracement can go up to 24,000, 24,200. It may not cross the 24,500 from where we saw already the faulty levels of 23,400. And I will be very sector specific and stock specific until FII turns buyers. Even yesterday, the data is 1,500 crore of selling approximately, and for last 35 trading session, they have been selling continuously. So having sold already so much, having seen Nifty correcting 2,700 points from the peak, we will see some amount of recovery. Now, very quickly, Sakshi, I will tell you which are the sectors and stocks to remain, or if you want to buy currently, what do you do? And how do you pick stocks? Very, very simple formula, available only in your show and in such a easy manner. Number one, the market fall started from when? It started from October 1st, where FII selling started, and from October 1st till today, every day, including Muhurt trading session, FII sold about 200 crore on Muhurt trading session, but I will exclude Muhurt trading because hardly it was 1 hour kind of a trading. But keeping aside that, yesterday's selling has been the least, which is 1,500 crore in last 35 trading session. So for me, you pick stocks, you tell me which are the stocks from 1st October date to today. I want them to be higher than where they were on 1st of October. For example, HDFC Bank. Look at what was the price of HDFC Bank on 1st of October, and look at what is the price today. When Nifty from 1st October to today has corrected 2,700 point, HDFC Bank is higher on today's market price, or on today's current market price. HDFC Bank is higher than where it was on 1st of October. Look at ICICI Bank. On 1st of October, what was the price and where is it today? It is higher than where it was on 1st of October, where you have already seen a 2,700 point correction in market. Look at Zomato. Look at, for example, even Paytm. I'm giving you large cap, I'm giving you some mid cap names, and I'm saying stock picking, you have to learn the skill. From 1st of October to today, give me list of stocks which are above their 1st October price. This shows to me relative outperformance. When you have seen Nifty correcting 2,700 point, these are stocks which are still above their 1st October price. And if you buy into these stocks right now and wait for 1 to 2 years, you will make killing money. I'm still telling markets have still not bottomed.
Right.
Might take time till, as I told you, the next after quarter earnings, and I want to see recovery in earnings. I want to see FII selling to stop, and you have to pick up right stocks from right sector, and this is what gives you big money. Selling has not stopped. But however, for short term, I expect a bounce to levels closer to 24,000 right now.
Got that. A 500 point of a rally expected in this bounce from here on. Already we are at 23,529 and therefore 24,000 is where Rudra believes that the Nifty could show in this interim bounce. He's on a buy side and the key stocks that he's identified for all our viewers are the large caps like banks, HDFC, ICICI and certain mid caps like Zomato and Paytm, where you could look at the outperformance that you've seen from October 1st when the entire markets have been seeing sharp corrections. These are the stocks that have proven to be resilient and that could probably give you an idea of how to select stocks in this kind of a downturn market. Thanks a lot, Rudra, for sharing that formula for all our viewers right there. Markets have settled in the pre-open, so it's a 75 point of an uptick at 23,529 right now. All the sectors for now, barring just pharma, they seem to be opening in the higher side, especially with those which actually were battered yesterday. Oil and gas seems to have some recovery coming in, 0.5% higher. Even the broader markets, PSU banks, financial services, they could be in limelight as well. Let's look at some of the stocks on the Nifty that could be opening higher. So a stock like Trent, for instance, that's almost up 0.9%. You have BEL, then Coal India, Titan, IndusInd Bank as some of the stocks that could be opening in the higher side as well. Within the PSUs, again, the focus will be on the power finances like REC, PFC, and of course, the oil and gas stocks is something we'll have to note again today. Remember, yesterday they were battered black and blue, especially the gas-related stocks because of the changes in the regulations, and therefore, you did see some kind of a pullback on these stocks. We'll see how they recover in trade today. A slew of other stocks and pockets that I want to discuss with you, Rudra. Let's start off by understanding NTPC. This is one stock that we will be looking at. Of course, the company has given a 2,400 crore rupees an interim dividend to the shareholders, the first interim dividend for the fiscal year FY25 as well. This represents 25% of the company's paid up capital. And apart from this, the key reason why NTPC will be in focus is because NTPC Green IPO will also open in today's trading session as well. The third largest IPO of this year after Hyundai and Swiggy, a 10,000 crore rupees fresh issue opening in, for the price band of 102 to 108 rupees. Your sense, Rudra, how are you analyzing this opportunity for investors? Do you think this is going to be an asset for all the portfolios of retail investors? One should not miss this. For those who have the NTPC shares, they have an additional shareholder quota also for applying for this one. Do you definitely think this is an opportunity shouldn't be missed, or do you think one should wait and watch and probably the prices are aggressive at this point in time? How are you reading into the diverse set of statements coming in on NTPC Green?
Sakshi, very crystal clear view that one, yes, NTPC Green, I will give a subscribe rating to the IPO. But however, we have to understand today it is easy to call yourself as a techno funda analyst and then give fundamental and technical view. But then as a chartered accountant, I'm telling you, it is not easy to understand both technicals and fundamental. As a long-term investor, you need fundamental understanding. And for short-term market movement, you need technicals. But let me tell you very clear, fundamentally what happens to company like NTPC, now it becomes holding company. And whenever you have this holding company, they will generally trade at a discount of 50% to the real value once that company becomes a holding company. So now what has happened is NTPC having become a holding company, it has seen already correction from 450 levels to current price of around 360, 370. Now, at one end, if you see, because of this NTPC Green IPO, NTPC shares have already corrected because of that holding company discount. So for me, NTPC Green is a subscribe rating, very clear. And if I have to buy NTPC, I will wait for lower levels, which might be around 300 to 330. So if you have NTPC with you, wait for those levels of 300 to 330. I will not advocate a sell at current market price. But then if you want to accumulate, if you want to average and build your portfolio, with NTPC, wait for those levels of 300 to 330 or at least 340 will be a strong support area, where from there on to levels closer to 300, every dip from 340 to 300, I might accumulate NTPC for a portfolio, but definitely not at current market price. When it comes to NTPC green, as I told you, yes, it's a subscribe rating.
Sure. So that's as far as NTPC and the NTPC green opportunity is concerned. Markets have opened and above 23,500 is where we have seen the Nifty opening at 119 points higher. So definitely a great start to Tuesday right there. Let's hope that this improves. Yes, 117 now, 23,570. Let's hope we inch higher from here on. All the sectors, barring the pharma index, have opened into the green. Let's look at the IT index. That's opened with over 1% gains. Remember, yesterday it was nearly battered by nearly 3%. Even the oil and gas sector that was sharply down yesterday is opening about 1.2% higher in trade. Realty, small caps are also opening nearly 1% higher. All across the board, we do see a sea of green, which is good. Let's look at the top stocks. NTPC, the one that we just stopped talking about, it's the top mover on the Nifty, 2% higher in trade right now. Trent about 2.2% higher. BPCL, Infosys, Tata Motors, these are the stocks that are forming the top 5 gainers on the screens. We have just far and few between losers at this point in time. So Shriram Fine Pharma, Dr. Reddy's, Cipla. So the pharma stocks are actually on the back foot today. The Nifty PSE index is also up by about 1.5%. Strong gains being seen on PFC, REC, like I pointed out, 2.8% higher for these stocks. NTPC, BPCL, even IRFC, Concor, ONGC, these are the stocks that are pulling up over 1% higher in trade. Let's look at Vari Energies, for instance, in the broader markets. The company came out with its numbers as well, and we have been looking at Vari Energies pretty closely since the time it got listed. A 4.5% downtick on this one. This is after the company posted just a flattish revenue growth of 1%, but the profit has improved by 14.7%. The earnings have not been very enthusiastic for the street. That was estimated higher set of numbers coming in from Vari. So there you have it, a 4.4% downtick. But let's also look at some of the other stocks right there. Let's look at a stock like Indian Hotels. Remember, Jefferies has a buy rating on this one with a 785 target price, and they are actually looking at both numbers as well as the management, which is pointed to higher growth going forward from here, 0.7% higher. Indus Towers, let's look at this one. Citi has come out with a buy report. Let's see how this one is reacting. A target price of 485 is what they have given, following key positives, which are acceleration and recovery of the past dues, declining capex aiding FCF generation, that's the free cash flow generation, improving visibility of the dividend reinstatement as well, 2% higher for Indus Towers today. Let's also look at Suzlon, for instance. There's a Morgan Stanley report on Suzlon. They believe that the company has an overweight rating from them, and they have given a target price of 71, about 1% higher at 59.8 on Suzlon right there. Let's also look at RK Forging. UBS has a buy rating on this one with a target price of 1500. It believes the company continues to deliver double-digit growth, and they believe the higher penetration of EVs and aluminium forging is continuing to drive up the outperformance for the company going forward. So RK Forging is one that you could keep an eye out on. 2.2% higher. Glenmark Pharma, another one that you could be looking at right there. About an 1820 target price has come in from Motilal Oswal Financial Services among the brokers list today, with a buy rating on this one. They are also looking at strong set of growth performance to be coming in going forward from here. Let's look at the broader markets. Are there any interesting names that we could talk about where there is substantial gain being seen? Z Entertainment is something that you could look at, 6.5% higher. The reason is very clear. Puneet Goenka has asked the board of Z Entertainment Enterprises to relieve him from the position of managing director of the company, as he wants to focus on the operational responsibilities as the chief executive officer to the media and the entertainment firm right there. 6.5% higher for Z Entertainment. Let's look at some of the other stock. Look at Chennai Petroleum, a sharp move of 6% coming in on this one. Hitachi Energy is up 5.6%. You have Also, the stocks like Shakti Pumps, for instance, a 5% uptick for this one. Some of these stocks are actually doing very well in the broader markets. Let's also look at the Nifty Next 50. Macro tech developers, 4% higher in trade. That's the real estate move that's coming in. Varun Beverages, another one that was an outperformer yesterday also in the Nifty Next 50 list. I think about 6% higher in trade is what we saw by Varun Beverages yesterday. Another 3% move is being seen right there. The Nifty, don't lose sight of it, 23,600 is now with us and with the bulls, 147 points higher on the Nifty, and we are gaining further ground too. I will also point out to you the key contributors to the gains that we are seeing in the markets right now. So Infosys is contributing about 19.5 points to the gains. Reliance Industries is pointing out a 16.5 points of gains coming in. HDFC Bank, Trent, Tata Motors are the ones that are actually contributing to double-digit gains on the Nifty right there. Also looking at Indigo, for instance, 2.3% higher. Remember the the kind of data that we are getting from the air traffic is also increasing, pointing out to higher demand, and therefore the Indigo GMR Airports Infra will also be in focus. GMR Airports Infra has also pointed out in its October update an increase in the handling of passengers by 9.2% year on year to over 10.7 million. This includes both domestic and the international traffic as well. So 2% uptick that's coming in on that front as well. Let's get back to Rudra. Rudra, how are you assessing the opening, which is strong, and now we have 23,600 with us?
Sakshi, very clear. Morning also, I was just telling you, yes, I'm looking for those levels of 24,000. I even told you that this bounce, whatever we are seeing right now, is a retracement of the fall. So having seen a steep, previous one started from 24,500, and from there we saw levels of 23,400. From there we are seeing that bounce, and yes, this bounce will continue. And also I feel post the Maharashtra elections, if we can see a positive outcome next week, yes, Monday again you will see another gap up kind of an open, and this bounce, more of short covering and more of retracement can be seen. I won't be surprised even 200 points above 24,000, anywhere between 24,000 to 24,200 markets will go and settle there. And again, we will see some amount of selling because we don't have that support from corporate earnings, number one. Still, there is no valuation comfort, number two. FIIs are still selling, might be the selling has reduced, but this selling is still not yet over, and we have to see some amount of change in these areas. And once we see budget in 2025, I don't want to see another either hike in STT or capital gain increase. All that which happened this time will not be there, and that kind of a push up and more government spending to come will make some amount of reversal of trend, and might be post that February budget and the result season of next quarter, we will see some amount of bigger reversal of trend and bounce. But right now, whatever we see in Nifty and Bank Nifty, the kind of retracements what we are seeing right now, later on from those levels of 24,000, 24,200 in Nifty, and might be Bank Nifty at around 52,000 level or 52,500, you will see another kind of a selling from there on. But however, you have to be very sector specific, very stock specific. And just now I told you, Sakshi, look at stocks from October till now, where we have still outperformance, where the stocks are higher than where it was in October 1st level, and pick up those stocks I told. Now I am giving you second clue on your show alone, and that second clue is very simple. We had 25% of companies who have given better than expected result. No doubt 75% gave below expectation. On an average, I'm just telling about 25% of corporates gave results better than what was expected. They had both top line growth as well as bottom line growth, revenue growth, volume growth, as well as PAT growth. Now, even because of bad market environment in last 1 month, even good companies with great results saw price correction. Now, if you want me to name some of them, for example, look at Ramco Cement. Ramco Cement came with fantastic result, but price has gone nowhere. And I can name some more companies where results were good. For example, Ashoka Buildcon. So results were very good, but stock did not make any move. And I can even name some more stocks from banking, except Indus India Bank, All companies from banks came with great result. Look at PSU Bank, Bank of Baroda, Punjab National Bank, SBI, fabulous result, but stock prices have gone nowhere. Look at private bank, whether it is ICICI Bank, HDFC Bank, or even Axis Bank. So there are good results, but prices have corrected or they have not moved up because of that good result, because overall markets were bad. So these are stocks which you have to pick, and this is second way or another additional way, a higher way of picking good stocks. And I have named already a lot of companies where we had the 25% kind of a corporate result which was above expectation, where there was top line as well as bottom line growth, but stock prices have not moved because there was no good market condition. But I will not pick stocks which have fallen because of bad result. I can name many stocks which have fallen because of bad result. So for example, look at Hindustan Unilever, results were good.
Yeah.
Still stock fell. But look at Asian Paint. Look at even your names like Britannia. All these were places where there were bad results and prices fell 10% on the result, and these are all F&O stock. They are not mid cap, small cap. F&O stock falling 10% because of bad result, because in the bad market environment in last 1 month, bad results were butchered. Good results also saw profit booking. So I will buy good results which saw profit booking, and this is second method of looking at great companies, great sectors to buy. And third and last way of looking at stocks to buy in this current market condition, and let me be very clear, you have to avoid stocks where there is no valuation comfort. I want to
Correct.
buy only those companies where I have valuation comfort. And yesterday I made a strong statement. Look at even Honasa, 20%
Yes.
fall yesterday, Sakshi, but I am telling you, don't buy because there is 20% fall. Can
And
you
there
tell
is
me what
another
is the
13% fall today also on Hunasa, Rudra.
Sakshi, thank you, because I don't have that update. I'm in your live show and I have to now put in Honasa, or I'm seeing that on your screen where it is 30%, 13% fall, or you have seen already in 1 week a 30% kind of a fall. What I want to tell you, people want to buy Honasa yesterday after seeing 20% fall. But if you go and check the trailing PE, I'm not talking 1 year forward PE, trailing PE is 120 times. How do you pay 120 times PE, trailing PE, and you want to buy the stock? And I'm talking 120 PE multiple after 20% correction. Then you tell me what was then the PE multiple before the 20% fall. So you
Yeah.
can't buy a stock because it has fallen 20%, because even after 20% fall, the PE multiple is 120 times. These are crazy valuation. Avoid stocks where valuations are crazy, and don't buy them because they have fallen 20%. I'm sure this kind of an easy and crystal clear method of looking at market, both for short term and for longer time frame, and which are the sectors and stocks to buy, and whatever inputs you are getting exclusively available only in your show, Sakshi.
Thanks a lot, Rudra, for that update and very, very clear thought right there. I'm sure this is to benefit a whole host of viewers that have been grappling with as to what should be your strategy in this consolidated market. Today, it's a good day. 200 points of gains is what you see, 23,663. And again, Rudra was pointed out that he's expecting a bounce, and this could take us to 24,000 yet again. Already from where we started off, we are up over 212 odd points, and they're further gaining strength right there. Of course, it's all the heavyweights. Banks which are supporting the sentiments right now. You have a whole host of sectors that are up, even the IT stocks that are up right now. Very clearly, he's also told all the viewers right there, in case you also had this question, Honasa, is it attractive after that 20% dip? Today again, there is another 14% dip. So there is a no-go zone right now because of the higher valuations and the valuation discomfort in such places. Let's actually talk about
Sakshi,
the
and also another
yeah.
point, just because we are talking Honasa, let me give you similar comparison of this new age or e-commerce kind of a
Sure.
stock. And thanks for this Honasa, what you pointed out. What I want to tell you, Sakshi, is if you want to buy this e-commerce or new
Yeah.
age kind of a stock, which are the ones to buy? Now, Zomato is a stock. Go back and check what was the price on October 1st and what is the price today. Yes,
Correct.
even at current market price, if I have to buy the theme of e-commerce, new age stock, I will stick to Zomato. Why do you want to buy Ola Electric? Ola Electric is like Zomato post IPO where still it was making losses and it was correcting. I don't want to buy Zomato at 40 rupees, 60 rupee where there was no clarity. There you are not investing or trading, you are gambling. If I want to gamble, I will go to Goa. I will not come to stock market. So what I want to tell you is, I'm not saying there is 100% accuracy in stock market or I will never go wrong and kind of a thing. But what I'm trying to tell you is, overall you have to make money. You might lose 2 out of 10 or even 5 out of 10 or even 7 out of 10. Being right, even 3 out of 10, I know how to make money. Overall, making money in market is important. Zomato, even at current market price, looks attractive to me. Paytm is not at 2000 rupees. I'm not recommending Paytm at an IPO price, or I had in fact a no for Paytm. In fact, I used to make a statement, if you buy Paytm, you have to pay regular M to M. And I used to tell, if you buy Zomato, then tomato will be better than Zomato. But do understand the situation from last, let us say 2 years to now has changed for Zomato. The situation of Paytm has now changed. Fundamentally, RBI yes gave the tick mark now and permission is there for them. And Paytm is not available to you at 2000 rupee. Already from 300 it has bounced to current price of 700 odd. And in last 1 month where markets are falling, look at what has happened in Paytm for last 1.5 months. You have made money in Paytm. So for me, Paytm at current market price, Zomato at current market price is far better. Do not go for Honasa. Do not go for stocks like Ola Electric just because it is available below their IPO price and it had gone up to 150 rupees and now Ola Electric has corrected and it is below IPO price. So great buy. So what people are doing mistake is, because they have fallen so much, they want to buy them. And people did the same mistake with Yes Bank, because it has fallen so much, people started buying. And yes, I used to make this statement, say no to Yes Bank. And why do you want to buy Yes Bank when you have HDFC Bank or ICICI Bank? And if you have more money, give it to Tirupati for donation, you will get at least some Balaji blessing. Giving to market, you get nothing. So what I want to tell you is, look at stocks very selective and look at sectors very selective. And you told me, Sakshi, much before market, I said bounce will come to 24,000 and you are already seeing the 220 point kind of an up move. It is not because of Rudra. It is all God's grace and blessing. And that is where we have to remain as much humble as possible and say that yes, when you are right and when sun is shining on your side, you have to make money. And when you are wrong, you have to stay back and look at what went wrong and learn from that. Yes, lot of people have lost 40-50% of their portfolio in last 1. That is, they ignored valuation and they were buying stocks at any PE multiple, and they were simply buying companies without good fundamentals also and technically also. See, if someone says a stock is fundamentally very strong but technically weak, or other way around, technically very strong, fundamentally weak, I say the analyst is weak. There cannot be a stock which is fundamentally strong and technically weak, because both go hand in hand. So I want to tell you, fundamentally I've given you a lot of inputs. Technically also I've told you how to pick stocks and at current market price what to do. And yes, if you watch Sakshi's show and learn all these things and correct your mistakes, I have done enough in my last 2 decades of market experience. I have done enough mistake, but I have learned from them and I don't want to repeat them in future. And that is what gives you overall money in market.
Absolutely, Rudra, and may the grace continue to shine even brighter in future on you. And may you continue to share all that wisdom with all our viewers that has been garnered with, a lot of effort, a lot of research, a lot of self-study, and of course, studying the markets. And markets are a great teacher, like we always have known. So, of course, we can do mistakes in the markets. Everybody does. Even the greatest of investors have made mistakes, but they have learned from them and, of course, improved. And that's how the journey becomes even better. And that's how we hope for all our viewers it turns out to be so, with the guidance of all you experts on our channel as well. So, Rudra, the other space is the IT space that I wanted to understand from you. Again, there's a lot of dichotomy. One doesn't really understand what's really happening right here. This all started off, there was a bounce back right before the US elections in anticipation that probably Trump trade will be better for the IT stocks. That also played out in a bit. But again, there is the factor of US Fed and how the interest rate factors will play on. There is a continuous overhang of whether things will go the right way or not. How do you anticipate such export-oriented sectors of India to perform from here on? Is it wise enough to go long on IT? Especially both on large and mid caps right now, or do you think there still needs to be some more clarity?
Sakshi, great question, and I will give you clarity, crystal clear clarity. Number one, when we have seen 75% of corporate earnings being below estimate in India, look at what has happened in US for this quarter result. It has been opposite. 75% of companies have given earnings better than expectation. That means there is beat in result expectation overall. If you see the same quarter for US versus India, that means if US is doing good in terms of corporate earning, tell me what will happen to IT stocks. It has to do good. And I don't know about politics and Donald Trump, but I know only one thing, that they're making even US a much better place than what it is by bringing lot of new age kind of a working environment in government. And I know that yes, people like Elon Musk and lot more people coming into that US market should make a big reversal in their debt. And if you see US debt right now and the size of it, it is unimaginable. 8-digit, 10-digit, 12-digit calculator is not enough to describe. But yes, people like Donald Trump, people like Elon Musk can make the change. Yes, in India, we saw that change for last 1 decade through people like Narendra Modi and his government. And it is just not Rudra, it is just not Rakesh Junjunwala. Whatever is good, we have to appreciate. I can appreciate Narendra Modi. I don't want to talk about Donald Trump. If you cannot appreciate your own prime minister, who else in this world can you appreciate? I am a positive thinker.
Right.
Yes, a lot of changes will happen even in US markets towards good. So for me, these points tells to me, don't look at only yesterday's IT correction and then come to a conclusion that IT is a very bad sector, because yesterday you saw some amount of fall in IT stock, and yes, you yourself told Sakshi that is because of the interest rate and the Fed decisions which are coming, which made yesterday's correction. And I will tell you, IT is my top sector to bet in this market correction, and I'll be buying Wipro, I will be buying Tech Mahindra. And if you want to buy some mid-cap IT, look at Coforge, look at Persistent System, and still stay with large cap. Look at TCS, look at Infosys, look at HCL Technology. So for me, I have given 5 names to you from IT, and IT will be my top sector. Results were fabulous for IT stocks. This corporate earnings, if you see the last quarter, what we have seen, IT results were good. And especially Wipro, Tech Mahindra, fabulous result. Even Infi TCS came with good results above expectation. Look at Coforge, look at Persistent System. And if you buy IT from now on and hold it for next 1 to 2 years, you will make a return upwards of 50% irrespective of market in next 1 to 2 years. But if you are looking for 1 day, 2 day kind of a trade, then don't come for IT. I am very clear, next 1 to 2 years, some of the names what I names, and IT will be the top sector for next 1 to 2 years.
Okay, IT sector will outperform in the next 1 to 2 years. If you're a long-term bet, then definitely IT sector should be on your radar right there. 23,691, 237 points higher in trade. We are inching towards the high point of the day right now and towards 23,700, and hope that also gets crossed in. And we are just about 25 minutes into the trade right now, viewers. It's panned out to be fantastic. 25 minutes up until thus far. We had an opening above 23,500. We crossed 23,600, and now we are nearing the 23,700 mark as well. At the day's high point, what's contributing? Reliance Industries. 31 points of gains are being contributed by Reliance Industries on Nifty. Of course, it's HDFC Bank that Rudra's talked about. 25 points getting contributed from that one. Infi, TCS again from the IT pack. M&M and Trent are the other big contributors to these gains on the Nifty right now. Let's talk Reliance Industries, Rudra. Despite all these news of bonus coming in, bonus split happening as well, on net balance, Reliance Industries is sitting on a zero return for 2024. But after this correction, do you believe that investors now could look at zero return for 2024? But after this correction, do you believe that investors now could look at Reliance Industries and this is the right time to garner this large cap stock into the portfolio?
Sakshi, great question, and people, lot of them need clarity on what to do with Reliance, and I'm giving my view. Reliance at around 1,200 looks attractive to me when it comes to valuation. So might be, yes, you are seeing today a short-term bounce, and let me tell you, for pure intraday alone for today, if you ask me, the only reason why Nifty is now shooting up is because there is support from both Reliance as well as IT. Yesterday it was other way around. You saw Bank Nifty being positive and moving up, but Nifty was down. That was because both IT as well as Reliance was not supporting Nifty, and banks, if you see, however, HDFC and ICICI, these stocks were doing good. But today it is other way around. You are seeing Nifty performing better than Bank Nifty because both Reliance as well as IT is now supporting Nifty. So my view on Reliance today, whatever bounce you are seeing, it is just a retracement because it has fallen already straight from 1,600, 1,500 level to levels closer to 1,260, which we saw yesterday. So now a 20-point bounce after a fall from 1,600, which is about 300, 350 point. You have seen from the top 300, 350 point fall in Reliance, and today you are seeing a bounce of, let us say, about 20 point, and we can't conclude Reliance has now made a reversal. So what I'm only trying to say is, yes, intraday you are seeing bounce. And for me today, if someone asks me, Sakshi, mid-term, long-term, short-term, I will never go with the word long-term, short-term, mid-term. I will ask them, what is your time period? Because for some of them, long-term is 3:30 p.m. or intraday. And for some of them, that is the longest term. When I ask them what is short-term, they say 1 minute. They want to buy right now and sell after 1 minute. For them, that is short-term. So we have to define. I'm not saying they are wrong. For him, long-term means it is 3:30 p.m. So I am defining, yes, after seeing a 300, 350 kind of a fall in Reliance, a 20-point kind of a rise cannot reverse the trend. So for me, Reliance at 1,200 looks good or attractive. I will not short Reliance definitely here. In fact, I will look at buying it for my portfolio closer to that range of 1,000 to 1,200 level. And yes, Reliance is a great stock to own, no doubt, but I will wait out because shorter term trend is still down on Reliance. Sure. Again, I won't be surprised if the bounce gets sold off, and whenever FII selling happens, Reliance cannot do good. So sure, let FII turn buyers, let market see another kind of a correction. And if you are an investor, accumulate it closer to 1,200. But as a trader, yes, you can expect a short-term bounce.
Well, 23,700 is upon us. Viewers, 245, 246 points higher on the Nifty. We are at the day's high point, and we've crossed two key levels of 23,600 and 23,700 in just the hour of. Rudra, tell us now, beyond 23,700, is the trend after getting solidified in the first half an hour looking even more promising for intraday?
Possible, Sakshi, but one has to understand there is something called risk reward. I will not buy at 23,700 for a target of 23,730 for intraday. I'm just talking intraday, which was your question very clear. So I won't buy somewhere here because we were shouting at our channel from 9 o'clock saying that yes, today will be a place where you can look at that big bounce. And I said, yes, it will go to 24,000. Now what you have to do, if you are a positional trader and not an intraday trader, still use any dips or correction in market to buy. But you have to keep that in mind that yes, the bounce what we are looking at can be to levels closer to 24,000 to 24,200 on Nifty and not beyond. And stock specific, we have discussed so many names, and I'm so happy to see. I will give you a few more names. Look at Federal Bank. I'm naming the stock to you, Federal Bank, Sakshi. Fabulous result. And yesterday stock had come to those levels closer to 198, 200 zone. And it was a mouth-watering buy. Because every stock is getting corrected, whether they came with good results and bad results are getting butchered. So for me, Federal Bank was a great buy. Today up 3.5% already. Look at even stocks like, for example, Polycab. Results were good. Stock has already corrected enough. So for me, Polycab is a great buy. Look at even stocks like, for example, metals, where Vedanta for me is a very good buy. Even after yesterday's move and China's stimulus package coming will definitely be good for metals. So I will be a buyer in any correction if I see in metal stocks, especially Vedanta. Look at Nalco. Yesterday, if I'm not wrong, that was the top performing stock and it was a mouth-watering buy. So I will stay with these type of stocks and I will buy these stocks till Nifty goes to those levels of 24,000, 24,200. I may not be an index trader, or unless you are an index trader, then you follow Nifty, Bank Nifty and buy it for those level. But if I'm a stock specific trader, I will be looking at buying Vedanta, I will look at buying Federal Bank, look at buying Polycab, and I gave so many other names like HDFC Bank, ICICI Bank, and for me, Indus Tower looks very strong. Ramco Cement post results, fabulous numbers. Stock can still do good from current level. So many names are there for you where a lot of money can be made even in this retracement. But I will turn cautious again when Nifty goes to the 24,000, 24,200 level. I will go back cautious as a short-term trader. But I'm not making my investment portfolio zero and getting out of everything. In your investment portfolio, stay with stocks which are relatively outperforming from October 1st to now. Stay with stocks where you have valuation comfort and PE multiples are not like Honasa 120, 130, 150. And third most important, I will buy those stocks where results were good, but the stock has not performed even in spite of good results because of overall market being negative for last 1 month. If you keep this as theme, look at a lot of sectors and stocks which I have given, there is a lot of money to be made overall in this market, Sakshi.
Absolutely. So there you have it, viewers. Rudra has absolutely clearly talked to you about the 3 key ways he's looking at this current market in terms of selecting his stock ideas. Hope you've taken this down. If not, don't worry. We will chunk it out and put it as a separate chunk on our YouTube channel for you to continuously learn from the that Rudra has to share. Always he comes on our channel. Rudra, it's always a pleasure to host you, and with the utmost clarity that you share your views with our viewers. This is what we need at this point in time when everywhere else, at least in Delhi NCR, it's hazy, it's blurry, it's smoggy and foggy, and there is a lack of clear visibility at this point in time. This is what we appreciate. Thank you so much for being with us on this channel as always. All right.
All God's grace. Thank you so much, Sakshi.
Thank you. All right, viewers, we'll start to look at wrapping up the markets for the morning trading session. It's panned out to be a great first half an hour of trade. Let's hope it stays on. 219 points still remaining. But remember, we went up to 23,705, 23,710. And we've started to see some pullback from there. Let's hope that this is just volatility and it further inches higher right now. All the sectors on the Nifty are up into the green in the first half an hour of trade. It's the Reliance index that's up by nearly 2%, the top moving one. Autos, that's up by 1.7%. Small caps that have inched up higher, 1.5% higher, now 1.7%. Oil and gas up by 1.5%. Consumer durables, mid caps, IT, PSU banks, these are the ones that are upwards of 1% gains can be seen, at least in about 8-9 indices. We are seeing upwards of 1% gains coming in, whereas all the others are also in the positive zone. Only one index is down in the red. Good to see this. India VIX is down 4.7% at 14.5, which means the pure gauge or the volatility index is pointing to lesser volatility, and this is what the markets clearly appreciate. Top movers on the Nifty: Trent, M&M, Adani Ports, Tech Mahindra, Eicher Motors. Top losers right there? Yes, we have a few. HDFC Life, Bajaj Finserv, SBI Life, HUL, Britannia and Cipla. So some of the defensive names that are not really doing well at this point in time. But all across the board, there is no complaint. The kind of gains that you're seeing, even on the Nifty PSE index, it's up by 1.6%. Top movers on the F&O space: Dixon Tech, GMR Airports Infra, Federal Bank, that even Rudra pointed out, one of his top picks, and Bharat Heavy Electricals, or BHEL, as well. We'll leave you at that on this morning edition, but do stay tuned. It's going to be an action-packed day for us here on our Business Today television. We'll get you the coverage on NTPC Green IPO, where the management will be talking to us about what their plan is as far as post-listing is concerned for the company and the vision going forward. We're going to be having earnings interactions with Wari Energy soon after this show too, and of course we will be getting daily calls and much more for you. So stay tuned throughout the course of the day. We have a lot more to share with you.
I know there is, like the way I said about fiscal consolidation, fiscal tightening, there is also this discussion about inflation. The question that it is the top three perishable goods which are causing stress onto the inflation numbers, whilst for the core others, the numbers are actually in the low 4 or 3. On the higher end of 3 but lower end of 4, and so on. I do not want to get into this debate of whether perishable should be part of inflationary measure, index or whatever, and whether it is just a supply chain problem, demand supply problem, we should influence the decision of the MPC or not. Yes, we know India periodically and cyclically suffers from adequate supply of perishable commodities. We as a government are making a lot of efforts towards scientific and more rigorous storage facility for perishable commodities. So till you really get on the top of that issue, you will periodically have this problem of tomatoes, onions and potatoes causing immense stress in a cyclical fashion. When you have this harvest season, you get it all, and later if there has been a rain or a drought and end of the supply season, you always have a shortage. We try to import, we try to make up. And edible oil is another thing. I think the government is doing right by supporting growers to have more oilseed production. We've even brought in a palm oil mission, so palm can be grown in favorable climatic zones of the Northeast. We are making sure the pulses are being brought in as and when there is a requirement. But global markets don't go by your demand and supply ups and downs. They want a consistent flow of pulses to come in.